Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. Hey guys, welcome back to yet another episode. We are back once again. Hamish, how are you doing, mate?
I'm doing great. I'm in the weeds of my next video. I decided to do, last year I did a video kind of going through, it was more like a film review, I guess, than a normal video of some of the bad characters in The Big Short. And recently, it was funny, that video did pretty well at the time. And then in the last couple of months, it's just gotten new life. So I decided to revisit my that kind of style of video, but look at some of the other characters. So yeah, I'm deep in the weeds of that at the moment.
Take a template that works and just keep doing it.
Yeah, exactly. It's also just like a fun, it's like a different style of video. It's like less, I mean, there's still like quite a lot of research involved in it, but there's more of like a film analysis element to it as well, which I kind of enjoy. So
I do like those videos when you kind of just do something a little bit different. I don't know, for me personally, when I do these videos that are just different to kind of my normal style, it tends to flop, tends to not perform super well with my audience, but I still find them more enjoyable sometimes. Like some of my favorite videos to make have gotten pretty much no views versus the, what's Warren Buffett up to this week, that kind of stuff.
Yeah, no, that's actually so true. I think probably one of my favorite videos that I made recently was like an end of year review for 2023, like finance 2023. I kind of took like Vox does these great 6-7 minute recaps where they go through the entire year in politics and then just kind of pop culture. And I kind of took that format and just applied it to the financial markets. And yeah, that video absolutely bombed. Like it's probably the worst video I've made in terms of views in like the last 2 years or something insane like that.
Wow.
But I had a lot of fun making it just because it was just a different like creative challenge. Even the kind of the Charlie Munger video after he passed away, I tried to make a video where I wasn't speaking at all. It was just, it went through his life and it was all his words. The entire video is clips and interviews. And even that is just like a different kind of creative challenge, and it does make it more interesting. But yeah, again, those kinds of videos where you deviate, they often don't do that well, unfortunately.
Yeah. Well, on that sad note, actually, Hamish, have you been following what's been going on with NVIDIA? This is not an actual story, but a little anecdote. Have you seen that NVIDIA has been dropping like a brick over the past few days? Yeah. The shares, well, it doesn't sound that bad, but listen to this, right? So the shares dropped from $135 down to $118. And that movement alone across 3 days wiped out over $500 billion in market cap.
That's crazy. That's insane. Wow.
So it is bouncing back a little bit, but I was very intrigued the last few days. I was like, well, is this little AI bubble bursting? But we'll have to wait and see. There's no like bigger story behind that, but I just thought it was pretty crazy that the stock drops from 135 to 118, and that movement is $500 billion of market cap just gone.
Yeah, that's insane. Yeah, it's probably like more than the GDP of like the state of Victoria in Australia or something. just eliminated in a single day. It's kind of crazy.
So true. Anyway, what else are we talking about today? Not NVIDIA. We're talking about other stuff.
No. Speaking of Australia, though, we do have an Australian inflation update. We've had good news, relatively good news in the US on the inflation front, but Australia unfortunately had some bad news in their latest update. I want to talk about a new deal between Volkswagen and Rivian. And if we get time, we'll talk about Disney and their recent box office success.
Ooh. All right. And what am I talking about, Hamish? I got to get back to my page. Oh, that's right. Talking about Novo Nordisk and their drugs Ozempic and Wegovy, and also Apple has come under fire in the EU this week. So we'll talk about what's going on there because, well, it's the story of another tech behemoth getting another antitrust fine.
Yep. That's nothing new in the last couple of years. That's for sure.
Nope.
Well, with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings. And manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days.
All right, Hamish, where are we going to start? You want to talk about what's going on with this Rivian business with Volkswagen?
Yeah, so we've kind of spoken about Rivian a couple of times on the podcast. The last time we probably spoke about it in a meaningful way was back in 2021 when they went and IPO'd and had the most insane IPO valuation, which I'll kind of revisit in a second. But the news this week is that Volkswagen is expected to invest up to $5 billion in the EV manufacturer Rivian. They first announced a $1 billion investment equity stake in the company, which they also plan to increase to $3 billion in the coming years. So, they're making a considerable equity investment in the company. I don't exactly know how much equity they got, but the current market value of the company is about $12 billion. So, if they end up getting up to $3 billion, that's a considerable. You would imagine they'd have a considerable kind of equity position in the company. And they also, beyond the direct equity investment, they also formed, or they announced that they will be forming a software development partnership. So they're going to create a new software company that uses Rivian's vehicle technology as a foundation for developing better software, and that software will then be used in both Rivian and VW vehicles in the future. So I guess one of the things that Rivian has done, I guess as a startup EV company, one of the things they've done well is their in-car software, and that's something that VW has actually struggled with in particular. So this is kind of a way for them to merge forces with another car company and create some software that can be used in both of their vehicles.
It always blows my mind how bad car software is. Like, we're tapping away on MacBooks all day or on PCs, our computing, our software experience, even with Windows or Mac OS or whatever, iPads and iPhones, iOS, it's always like great. And then for some reason, you get in your car and the operating system of your car is just terrible. The software in your car is just terrible. I mean, there are some exceptions. I think that Tesla's is really, really good. I've never had an issue with their. In fact, their software is really, really good. But it just seems like whenever you get into a car, it's like you're stepping back a couple of decades, and I've never understood why. But they just don't have a good grasp on software. Car companies, they just can't do it well. I don't get it.
Yeah, it's such an afterthought for most cars. And I guess now kind of the good thing has been you have kind of Apple CarPlay and then Android Auto, is that what it's called? Where at least you can kind of just bypass the car's kind of inbuilt software system. But yeah, it is kind of crazy that vehicles and cars, spending time in your car is a pretty fundamental part of most people's lives. And yeah, it's not been really a focus until the last few years, particularly with Tesla. But so VW said they plan to spend up to $5 billion as a part of this partnership. So they've got the direct equity investment, and then they've also setting up this kind of joint venture kind of company where they're planning to invest even more money to kind of develop that software. And this, of course, is a very, very well-needed cash injection for Rivian. So if we kind of flash back to when they went public in 2021, They went public in 2021 with a peak valuation of $130 billion. And why we covered it at the time and why it was so ridiculous was they were doing $55 million in revenue. And even more hilarious, so they had $55 million in revenue and they had $5 billion in expenses. So I think the joke I'm sure I made at the time was if you gave me $5 billion, I think I could turn that into $55 billion.
Yeah, that's wild, hey.
So
that is actually, yeah. Oh, take me back to 2021, I say.
Yeah,
take me back.
Yeah.
Such euphoria.
What a time to be alive. Yeah, I think that's got to be one of the most egregious, overvalued companies of all time. I mean, it's up there with like Cisco and Yahoo and the internet bubble. That's absolutely insane. And then since then, the stock has done really well. It's down 91%. Who could have seen that coming? What a shocker!
Who saw that coming? Yeah. Who saw that coming, Hamish?
No,
not us. I was heavily in. I was about to say NVIDIA. I was heavily in Rivian. I was, deep in the call option territory. I was betting heavy, and it hasn't worked out.
Unbelievable. Shocking. Yeah. Not shocking. Down 91%, now worth, as I said earlier, $12 billion today. They have improved their revenue profile since 2021. So they were doing 55 million, 55 with an M, back in 2021. They're now doing $5 billion in revenue. So they are growing, selling their EV pickup trucks, but they are still very, very unprofitable.
Hamish, well, I'm going to have to stop you there. Since when does that ever matter? All I'm seeing here is 55 million to 5 billion. That is very favorable.
That is
I'm going to back that. That is you never understand this IPO business, Hamish. I've tried to tell you so many times.
You're right.
Top line only.
Yeah.
Top line.
Yeah. And
what is the bottom line?
Right? So it's 100x
off the top line
over 3 years. So in 3 years, they were doing 500 billion a year in revenue. I think that's right. Okay.
Yes.
Maybe 130 billion at IPO wasn't crazy after all. Maybe.
Yeah, that's what I was telling you. That's why I was deep in the call options. I was telling you, mate. No, obviously that is not good advice. Don't listen. Heavy sarcasm. We need a sarcasm button that just flashes it up on screen.
Yeah, we need a light that comes up.
Heavy sarcasm in use.
Yeah.
That's ridiculous.
No.
But I mean, it's something. Anyway, sorry, I derailed that. Tell us about this wonderful profitability story, Hamish.
Yeah. So they're doing $5 billion in revenue. Well done. They did have a $5.5 billion loss in the last 12 months, but.
Yeah, right.
I was going to say it's getting better. It's not. So they spent $10.5 billion to bring in $5 billion of revenue. So they turned a $2 coin into a $1 coin. So well done. Well done, guys.
Classic.
And on a cash flow basis, it's somehow much worse. They're burning $470 million a month. $470 million a month. And get this, so after the IPO in 2021, they had $18 billion. So they did the IPO, raised some capital, and they had $18 billion in cash in 2021. Yep. It's already down to $8 billion. So they've obliterated, $10 billion of their cash in the space of 2.5 years. So this cash injection from VW is very, very well needed.
Yeah, that is insane. Dude, I reckon I might apply to be the CEO of Rivian. I reckon I could do a better job. Jeez.
Yeah.
Wild.
Yeah. All you have to do is just don't make any cars, don't do anything, and you would do better. Like just take the 10.
All I have to do is just fold the company.
Yes, exactly. Just take the 10 billion and do precisely nothing with it. And at the end of the year, you'd have 10 billion. And instead, Rivian has 5.
Enhancing shareholder value somehow. I'm sure that falls under that category.
Yeah, exactly. It's not exactly a good time or an easy time to be a startup automaker, especially an EV one. Their cheapest car at the moment is still $70,000. So, they're kind of on the high end of the range. And it's hard enough to be a profitable automaker with the advantages of scale. It's a tough business even at scale, let alone when small. And it's doubly difficult in the higher interest rate environment that we're in at the moment. When interest rates go up, cars tend to be the first discretionary expenses that people kind of tend to cut when money is tight. And higher rates also make it more difficult for Rivian to raise more capital. They're still in that growth mode. They're very unprofitable. They need more money. And, debt, for example, is going to be much more expensive for them going forward, assuming interest rates stay around where they are. So it's a difficult time to be an automaker, startup automaker, but I wish them well. So
always coming through with the vote of confidence, the vote of support, rather maybe not the vote of confidence.
No.
Wild.
Yeah.
Wild.
On the news this week, the stock is up 75%. If you bought the stock last week, you're up on your investment. If you bought the stock any other time before that, you were down a lot. So
yeah. Wow.
There you go.
Still 75%, Hamish. Let's focus on the positives. That's amazing.
Yep, exactly.
Oh dear. Good luck, Rivian. Good luck.
Yep,
good luck to both Volkswagen and Rivian. Oh gosh. All right, Hamish. What shall we? Oh, I got to talk to you about this Apple stuff. Shall we move on? Was there anything else on the Rivian story?
No, that's it. What's Apple done now?
Okay.
They're always in trouble.
Yes, they are once again in trouble. This article comes in from the Daily Upside. I should add our friends at the Daily Upside. So it says here, on Monday, the European Commission accused Apple of breaching the relatively new Digital Markets Act, or DMA, which is a raft of legislation aimed at holding large tech companies to an elevated standard of antitrust and consumer protection. It may just result in the deepest regulatory bruise in Apple's history. It says here, EU edicts have already put a dent in the California company's business model. By the end of this year, all Apple devices sold in the EU will need to have USB-C compatible charging ports rather than Apple's bespoke Lightning charger. Hallelujah. I love that. Thank you. Thank you for forcing that. But this was an annoyance for the proprietary inclined Apple, but far from an existential threat. App Store scrutiny, however, cuts a little bit closer to the bone. Charging a commission on in-app purchases, typically between 15% and 30%, has long been a significant profit driver for Apple. Though some developers have complained they are forced to increase prices for users in order to offset the cost. Apple also stipulates that developers cannot tell users to simply go and buy, say, a Spotify subscription on their laptop to get a cheaper deal. So it's this anti-steering is what we're talking about, where Apple says, no, you cannot. You must pay our toll, and you cannot steer your customers away from our app to make their purchase there and save the customer 15 to 30%.
Yeah, that was always a ridiculous. It's kind of insane that they shouldn't be allowed to do that. Anything that prevents a customer from getting full access to transparent information is that's kind of ridiculous. It was the same when they, Facebook's marketplace doesn't take any commissions on anything bought and sold on there. But Apple was, charging if you did the purchase through the app, Apple was charging their 30% commission, and Facebook just wanted to put a little thing that said Apple is taking the entire commission. Facebook takes nothing, and Apple, blocked the update, which is just ridiculous. That's clearly. That to me, that's the purpose of the antitrust legislation, is for things like that, where it's clearly anti-competitive behavior.
Yeah. Generally speaking, I tend to side with the companies. Like I'm a general believer in a company can, kind of do what it likes with its own products, its own services.
Yeah.
However, I do agree in this instance where it actually, what they're trying to do is block just the transparency of information. Just blocking people from understanding what they are doing, then I feel like that's not very fair. The EU agrees with us, Hamish. It says the EU has said its preliminary view is that such anti-steering tactics are not legal. In fact, the EU Commission in March slapped Apple with a nearly $2 billion fine specifically over anti-steering tactics with music services like Spotify, in no small part because Apple operates direct competitor Apple Music. So in this preliminary ruling on Monday, regulators said that Apple's App Store steering policies violate the EU's Digital Markets Act, meant to encourage competition. So it says here, quote, "Our preliminary position is that Apple does not fully allow steering," said Margaret Vestager, who heads up the competition policy in Europe. Quote, "Steering is key to ensure that app developers are less dependent on gatekeepers' app stores and for consumers to be aware of better offers." Yeah. So, end quote. Under the DMA, Apple and other so-called gatekeepers must allow app developers to steer consumers to offers outside their app stores free of charge. Alphabet, Amazon, Apple, ByteDance, Meta, and Microsoft are the 6 gatekeepers who had to be fully compliant with rules as of March 2024. So They are saying, no, absolutely not. You must allow steering, or you must at least allow people to know that there is another option out there.
Yeah. Makes sense.
What do you think Apple had to say, Hamish?
What did they say? I'm sure they didn't like it.
You know what? You guys are right. We take it all back. No. They did not say that. They said, quote, "Throughout the past several months, Apple has made a number of changes to comply with the DMA in response to feedback from developers and the European Commission," said Apple spokesperson Peter Ajemain in a statement to The Verge. Quote, "All developers doing business in the EU on the App Store have the opportunity to utilize the capabilities that we have introduced, including the ability to direct app users to the web to complete purchases at a very competitive rate. As we have done routinely, we will continue to listen and engage with the European Commission." Well, that's interesting because that sounds like they're saying that they totally allow steering. Whereas the EU is saying, well, no, you don't. So we'll see. We will see.
Yeah, they always...
That's interesting.
Apple and Meta and all these big companies, they always seem to find ways around this stuff somehow. I don't know how they do it, but they always find a sneaky loophole that allows them to continue doing essentially what they've been doing. So I'm sure Apple's probably got something up their sleeve.
Yeah, you're not wrong. It's interesting. That Monday's DMA accusation broadens the EU's scope beyond just music streaming and could mark a new level of threat. So this is the bit that I found interesting, Hamish. Under the DMA, the EU can impose fines of up to 10% of a company's annual global turnover if it finds a breach has indeed been committed. And that can go up to 20% in the case of repeated infringements.
Yeah, that's absolutely insane. Yeah.
That's a big bloody number, Hamish. That's huge.
Yeah. The EU regulators have been, they've been strict on the big tech companies for a long time, but it has been, especially the last 5 years, every year seems to be a pretty considerable step up in some of the restrictions. Some of them I agree with, some of them I definitely disagree with. But yeah, some of these fines that, Meta already is getting fined an enormous amount every single year. There's been years where Meta's been fined $3 billion, $5 billion, $7 billion. These are massive fines. And it's just
a non-recurring expense, Hamish.
Yeah, it's a one-off item. Yeah, adjusted.
That's our ongoing joke. They always on the balance sheet or on the books, it always gets recorded as a non-recurring expense. Yeah. It's just a non-recurring expense that happens to happen every year.
Yeah, it's a recurring non-recurring expense.
Yeah, so funny. The interesting thing, though, about this 10% of a company's global turnover is that in its last fiscal year, Apple brought in $383 billion in total revenue with total net income of around $97 billion. So suffice to say, a fine running somewhere between $38.3 billion and $76.6 billion would be unwelcome, to say the least.
Not the best, not ideal, I think is the right... not ideal to lose half your profitability.
It's interesting. I've just got one more quote. It says, this is from Greg Taylor, an associate professor and senior research fellow at the Oxford Internet Institute. He said something quite interesting. He said, the case will be an important test of the extent to which large tech companies can creatively depart from the level of openness originally envisaged by the DMA's drafters, meaning this and a similar early cases are likely to set a benchmark for compliance and enforcement in the future. Because this is so new, it's kind of like how I guess law generally works, like looking back on past cases and what's happened in those examples, is that because this is new, these early ones probably do set the precedent. So it'll be interesting to see what kind of, if anything, comes of it, comes of it.
And these cases, even when they do decide to fine, like a Meta, for example, these cases go for years often, because it's not as if they just pay the fine. Sometimes they do, but generally speaking, they litigate it for 2-3 years.
As long as they can.
Yeah, as long as they can. And then hopefully they get a court decision that says that what they're doing is fine and sets a precedent. That's obviously their goal, and they think that the money is worth it. But yeah, I mean, Meta is constantly in multiple court cases every single year, with particularly with EU regulators. So. I'm sure we'll see more of this over the next few years. That is for sure.
Indeed. All right, Hamish, back over to you, mate. What should we talk about next?
Let's talk about Australia. We got some Australian inflation data for the month of May. Good thing we now get monthly updates for Australian inflation.
Yeah.
I think that started maybe about a year ago or so. It was fairly recent.
Yeah, fairly recently. We were just getting quarterly before that. Yeah.
Yeah. So now we can talk about it every month.
Hey.
But yeah, as I said in the intro, US inflation has been kind of a pretty consistently improving story throughout 2024. Unfortunately, Australia's kind of been the opposite. And the latest report was the latest consumer price index report wasn't that great. So prices actually rose 4% in the last 12 months to the end of May, compared to 3.6% measured in April. And it actually means now that since the December 2023 reading, so for all of 2024, inflation has been steadily rising pretty consistently. Which again is kind of the exact opposite of like, say, what the US has been experiencing, at least this year. And the 4% inflation reading comes in considerably higher than the 3.8% reading that was expected. I mean, it's only 0.2, right. But it's clearly a jump up from what was reported last month, and even higher than what was expected. The biggest contributors to the increase on the kind of the upside was housing, was up 5.2% year over year. And within housing, rent was the biggest, did the most damage, up 7.4% year over year. So rent increases have been a pretty considerable part of the inflation story in Australia. Food and non-alcoholic beverage was up 3.3% year over year. Transport was up 4.9% year over year. And then there's energy, which was up 6.5%. And within energy, electricity was the highest category, up 14.5% in the last 12 months. So, I think it does, maybe it feels like certainly inflation has improved from what we saw in 2022. But it's still quite bad in Australia.
I was reading these articles this morning on Australian inflation, and I was gobsmacked that the sentiment was basically people that think that we're going to see more interest rate hikes are stupid, ridiculous. How can you possibly think that? There is no way.
Yeah.
And I just got caught that, like, I still don't quite understand where these kind of opinions come from. When it's like, oh, inflation's still roaring or inflation's getting worse. And then so much of the media is talking like, oh, you would be stupid to think that interest rates are going to go up higher in Australia or stay the same. They're definitely going to come down over the next little while. And just the articles I read were just like so confident. I just don't understand how you can write like that. I don't really know. Maybe I'm missing something, but sometimes I'm just like, dude, have you looked at these numbers? Like,
yeah, I mean, there certainly has been a strong conviction that that there would be, we did our rate hikes, inflation came down, and now we can cut rates, and yes, slowly throughout the year that's obviously kind of gone away, and it looks like, at least in Australia, that certainly rate hikes might not even be off the table, especially considering inflation has now been rising for a number of months this year.
Yeah.
There was a little bit of downward pressure, somewhat, on the inflation figure, and that came from fuel prices, which declined 5.1% in the month of May, so in the kind of that 31-day period. And it marked the first monthly fall since the start of the year. However, fuel prices are still up 9.3% year over year. So, that was contributed to the downside, but yeah, generally not a great reading. And I mean, this is obviously bad news, particularly for people who are homeowners with a mortgage. Unfortunately, this will kind of further decrease the likelihood of a rate cut later this year. Last week, we spoke about the RBA deciding to keep rates at 4.35%. So they, at least for now, haven't decided to hike, but that may change. And I just wrote here that we've kind of switched places with the US inflation story, because back in 2022, they had pretty considerably worse inflation. I kind of went and looked back. Their inflation peaked at 9.1% and ours peaked at 7.8%. But then they actually increased their interest rates quite a bit sharper than Australia did. Their rates went over 5% and ours are kind of around 4%. And now we've kind of switched places where the US CPI is actually lower than Australia's. So it'll be interesting to see kind of how things play out. Because our central bank has decided to not raise rates as much as the US, and that seemed to be appropriate 6 months ago. But now,
less so now.
maybe not. So
yeah, very interesting.
So and the other thing I just wanted to tack on the end of this was Australia isn't alone in the countries, let's say like Western countries with inflation rising. Canada's inflation spiked as well. CPI rose 2.9% in the year to May compared to 2.7% last month. Although, of course, their inflation picture is much better than Australia's, with their headline figure already within that kind of healthy 2 to 3% range.
There you go, Hamish. All right. Is that all for the inflation updates of this week?
That's it.
We'll be back next week for more.
Yeah, can we get weekly?
Watch this space.
Can we get weekly inflation data?
Yeah.
How about daily? How about we just get a stock, or we get a stock price for the CPI?
Oh my god! Inflation data from the 23rd to the 30th of June was coming in hot. God damn. Oh, the news would go crazy with that.
Yeah.
All right, moving on, Hamish. Let's talk about something that's on the forefront of everybody's mind, and that is your weight loss journey. How's it going? Tell me.
Yeah, it's going great.
Yeah. You're still taking your Ozempic every day, like a good boy.
Yeah. I tried exercising for a while there, and I just didn't like it. So now I just inject myself every day. So
you just inject some Ozempic into your veins. But look, I mean, you wouldn't know it by looking at Hamish, but 1 year ago, Hamish was 120 kilos.
That's right. Yep.
It was a big boy, and now look at him. Look at that thinness through the chin. Oh, it's perfect. The chisel and the musculature. Oh, it's
fantastic.
Anyway.
And it's all thanks to the company you're about to talk about.
And it's all thanks to Novo Nordisk, which is where I'm somehow trying to get to eventually. Because Novo Nordisk just got approval to sell Wegovy in China. So it says Novo Nordisk said Tuesday that its Wegovy weight loss treatment has been approved in China for long-term weight management, opening up the blockbuster drug for sale in the world's second largest economy. China's National Medical Products Administration recently approved the weekly injectable drug, Novo Nordisk said in a press release on the Chinese version of its website. The drug will initially be available to patients with a BMI of 30, the threshold for obesity, and at least one weight-related comorbidity, it added. Weight-related comorbidities refer to additional medical conditions that someone with obesity can develop due to their weight. And the shares rose 4% on the news, so a little pop. Why? It's because more than half of China's 1.4 billion population are overweight or obese, according to a 2020 report from the country's National Health Commission.
Isn't that crazy that that's such a massive kind of human, it's like a globally human problem. Like I think the US must still be number one, right, in terms of obesity, but Australia's I think 2 or I think Australia's
we're up there as well.
Maybe in the top, certainly in the top 5. I'm not exactly sure, but it's kind of crazy that that's just a universally, maybe not universal, but it's clearly a big problem that's become much more worse, I think, over the last 4 or 5 decades, I think. So yeah, crazy.
It's kind of crazy. Like all the media and stuff always talks about like terrorism or cancer or these like scary ways that people die. But at the end of the day, like most causes of death are just cardiovascular diseases, just people being unhealthy, being overweight, diabetes, all that sort of stuff.
Yep.
It's a weird one where it's almost entirely self-inflicted. We've inflicted that we just eat too much and we're extremely sedentary and it kills us. And it's wild that is now one of humanity's biggest issues, health issues.
Yeah, it's wild. But not anymore. Now you can just inject yourself and
exactly.
And you can.
But that's the funny thing. That's the crazy thing, because instead of just diet and exercise, which has been the rhetoric which has been like, of course, go into calorie deficit, go exercise a little bit, and you will lose weight. But because that is just because people just don't do that, we're starting to look at these other ways to just make it happen through chemical processes. And obviously one of the ways is by injecting semaglutide, which is kind of a cheating approach. It's almost like getting a chemical version of liposuction, I guess.
Yeah.
But people do it and it works for people. Like the evidence is there that it helps you lose weight. Like it does genuinely help people reduce their body fat. So it's very interesting. That's obviously Novo Nordisk a few years ago was just making diabetes medication. That's all they did. And then they tapped into this drug Ozempic or this drug semaglutide, and then they figured out, hang on, this really makes people lose weight. And they did a whole bunch of tests on it. Now Wegovy is the same thing. It's just semaglutide as well. And now they market these drugs not only as help for, Ozempic not only as help for diabetes, but now Ozempic and Wegovy as these weight loss drugs. And they've been wildly successful, so much so that Novo Nordisk is now the largest company in Europe or something like that. And they're from Denmark, and Denmark has to publish 2 sets of economic data when they release their economic data. They publish with Novo Nordisk and without Novo Nordisk because it's just been so wildly successful, which is crazy.
Insane.
Yes. So meanwhile, clinical trial records show around 15 generic versions of Ozempic and Wegovy are currently being developed in China, Reuters reported last month. The company's Ozempic diabetes drug was approved in 2021 and saw sales in the Greater China region double last year. Novo Nordisk and competitor Eli Lilly have been struggling to keep up with surging demand for their obesity treatments. On Monday, Novo Nordisk announced it is investing $4.1 billion to expand its manufacturing in the US. Extra capacity from the new manufacturing plant in Clayton, North Carolina is expected to be completed between 27 and 29. And that's I looked into this because I was just like, how big of an opportunity is this Wegovy in China? So I looked up, the company has almost doubled their revenue since 2020. which is kind of wild. So they are now at 232.3 billion Danish kroner, which is 33.36 billion US dollars, with net income up 51% in 2023 alone to sit at 83.7 Danish kroner or 12 billion USD. So they're seeing incredible company performance on the back of these weight loss drugs. And if we have a look at what Ozempic has done, because Ozempic is sold in both the US and China. In the US, Ozempic sales have gone from 39 billion Danish kroner to 60 in 2022 to 63 billion Danish kroner in 2023. So quite a rise. But in China, it's still a lot less, 2.2 billion Danish kroner to 4.8 billion in 2023. So China's behind. And in terms of Wegovy, this is going gangbusters from 6.1 billion Danish kroner in 2022 to 29.4 billion Danish kroner in 2023. That's in the US. And of course, it's not being sold in China just yet. That's what they just got approval for. But you can see those results in the US. If they can get this kind of ramp up of sales in China with half of the 1.4 billion population obese in China, that's going to be something crazy. But the reason that it's taken off so much in the US is because it has hit the mainstream media. It is kind of the popular thing. Like Elon Musk is taking Wegovy. Like it's very popular.
Yeah, it's the cool way to lose weight.
Exactly, it is. It's the current trend. So they need to try and replicate that in China if they want to sell big. But they certainly have some big opportunities, don't they, Hamish?
Yeah, it's fascinating. Yeah, it's crazy. I think, in the I don't know all that much about the medical field, but I believe I don't know an exact percentage, but the vast majority of medicines that are used today, were discovered or invented or whatever of quite a long time ago. So it is kind of rare to have to come across something like this where it's they made a diabetes drug and now they've got this they've got this weight loss drug that seems to be extremely effective. So, exciting time.
And from their business perspective, they do kind of need to get the marketing machine going a little bit. I think their patents expire in China in 2026. And I mean, after the patents expire, it is just semaglutide and there will be generic copies and all that sort of stuff. So they do need to get on that and get to have that similar traction as what they got in the US. But we'll see.
Makes
All right,
sense.
Hamish, over to you. Let's talk about Disney, my favorite company. Are you watching The Acolyte? I hope you are. The new Star Wars show. Oh,
no,
I hope you are.
No, I can't say I'm watching it.
Dude, did I tell you the audience score for that was 14%?
Yeah, it's not doing too.
It broke my heart, man. It broke my heart. I'm a big Star Wars fan. I'm a massive Star Wars fan. So I live for the next Star Wars thing. But
yeah,
it's not hit.
I've still only seen one Star Wars movie, so.
Really?
I've seen.
What one did you see?
I've seen what is it? A New Hope? Is that the first one? Like not
the original.
The original one. Yeah. That's the only Star Wars I've seen, and I've watched Mandalorian, which was really good, and some of the other series, but I can't remember the names of them. But no, we're not talking about Star Wars today. Disney has finally found some renewed success at the box office. Their new Pixar movie, Inside Out 2, has reached $724.4 million at the global box office. And why is that number important? It is now the highest grossing film of 2024. So,
oh, wow.
Well done, Disney. They've surpassed Dune 2. This week, which has $712 million at the global box office. So, they've surpassed them, and they also are actually continuing to perform. It's been out for 2 weeks now, and it's been performing extremely well, even in the second week. So they did $100 million at the domestic box office during the second week, which was just a 35% drop from the first week. And typically movies will have a 50 to 75% drop from week 1 to week 2. So it's having some considerable staying power. And as a result, it looks like it could be maybe the first $1 billion box office movie of 2024. So that would be something. That's the hope for for Disney out there. It would also be the first movie to reach $1 billion at the global box office since Barbie, which was released last year.
Yeah, cool.
So there you
Hope
go.
it gets there.
Yeah.
That'd be nice.
It'd also be...
I just want...
Go on.
Yeah, I was just going to say, I just want more movies to come across and really be successful again. I'm getting so... It just seems like these days, like there are rare standouts. You had the Oppenheimer and the Barbie phenomenon, but I feel like apart from that, it's just kind of been just flop, formulaic.
Yeah.
I think audiences are growing really tired of the same formula, just trying to squeeze out another couple of dollars out of your pocket, you know?
Yeah,
I just want some cool, big name, original kind of stories to come through. Yeah, get some good directors behind them, and yeah.
Yeah, it's tough.
sad.
It's tough now. I think, the one argument is that, movies used to be able to not do that well in the box office because they'd have this kind of long tail of DVD sales and movie rentals and that sort of thing that doesn't exist anymore. And so, for a big movie to be, justified spending $100 million on a movie, it kind of needs to, they need to feel as though they're going to get a lot of money at the box office really quickly. And so you do get these kind of action, formulaic, franchise milking shows that seem safe and I think have been safe for a very long time, but they don't really seem like they're safe anymore. It seems like when they do that, they're kind of guaranteeing there's a good chance they just lose money on those shows. So hopefully that means we're at like a turning point where we see studios start to experiment a little bit more with new franchises or just new concepts and new stories. Hopefully that's the case.
Original content, Hamish. Fingers crossed.
Yeah, original content. It would also be, if it can reach the $1 billion milestone, it would also be Pixar's first $1 billion box office movie since Toy Story 4. So it's been a long time since Pixar has had a $1 billion grossing movie. Pixar and Walt Disney Animation.
That is not a new movie. That is not a new... When did that come out?
A long time ago.
To derail you. Oh, they came out in 2019.
Yep.
Wow.
Yep. And
sorry, that's wild.
Yeah, it's been both Pixar and Walt Disney Animation. They're both their animation studios that have been struggling since the pandemic. No movie since 2019 has done more than $500 million at the box office, besides Inside Out 2, which came out 2 weeks ago, of course. So
wow,
it's been a long time that their kids movies, their animation studios have not really been doing that great. And hopefully for the company, this represents a somewhat of a turning point, at least.
Did you watch the original Inside Out?
No, I haven't seen either of them, actually.
Inside Out is actually a really good movie.
Yeah? Okay. Maybe I'll maybe I'll check it out.
I enjoyed it even as an adult. So
yeah. I haven't seen... I don't think I've seen anything Pixar has put out recently, but I do go back and rewatch a lot of their old stuff all the time.
Yeah.
Like the Incredibles. What did I watch recently? The Incredibles, I think.
Yeah, you watched it on the plane.
Yeah.
You turn to me and you're like, God, this movie's a goat.
It's so good. All the Toy Story movies are good. All of those are so good.
Yeah.
I guess they're all just the movies that like we grew up on. So there's definitely an element of nostalgia.
Thing. Like they used to make these movies. Like yes, we watch them now because it's nostalgic and it makes us feel good. But they used to make them so that they were actually just good movies as well. Like you could watch Toy Story as an adult. You can watch The Incredibles as an adult.
Yeah.
I don't know why. I think there was much more focus back in the day of like they kind of picture, okay, parents are going to be taking their kids to this movie. So we have to make it work for the kids. It's a kids film. But they also took some real care to make it work for the adults.
Yes.
Like not with like gore or sex scene or anything like that, but obviously like the movie was still respectful of an adult audience watching it, like, and I think that's kind of lost a little bit these days, where kids films are just like I don't know, a chicken running around going ah! And the adults are like, oh my God, when is this going to end? But
I was speaking of The Incredibles, I mean, there's a ton of jokes in The Incredibles that are just for adults. I mean, like the whole thing that he works at an insurance company and you know, they're trying to deny claims. Like there's no kid who understands any of that, but it's but so that entire like scene or that part of the story is not even for the kids.
What about our stockholders, Bob? Who's helping them out, huh?
Yeah, it's so good. So we need more of that. We need some early 2000s Pixar movies to come back.
Yeah. I don't know. Something's got to change. Sorry, I've kind of derailed our discussion here. Hamish. What were we talking about? That was it.
That was it. So yeah, hopefully they can push through and get to the 1 billion at the box office this year.
Yeah.
So yeah,
man, I want movies to come back. I want them to be good, Hamish.
Yeah,
I want them to be good. Anyway,
one day.
On that cheerful note, let's get out of here. Thanks guys for watching, or thanks for listening as always, guys. We really do appreciate it. Hope you enjoyed today's episode. Please leave us a like wherever you're watching. Leave us a review as well. We'd love to see a nice review. If you don't want to review us, well, then just forget about it. Don't listen to this bit. We don't exist. But yeah, definitely reviews help, likes help, comments help. Much appreciate it. The main thing that helps is obviously you still being here and listening through the end. So we really appreciate it, guys. But with that said, we are going to bounce out of here. We'll see you guys next week.
See you guys.